Hey friends, I bet almost everyone out there searching for what's happening in the stock market, the bond yields going up, etc. Can't really get a clear picture on what's happening. Do you know why? It's because most writers, they don't really understand what they're writing about. The art of saying everything but nothing. So I'm here to tell you exactly what's happening, what do you expect, no BS, and simplify finance for the masses. Hey Chicken Gang, this small correction we are having, it's nothing. It's not the pandemic crash, it's the dot-com crash, it's not the housing crash. This selling off is mostly because bond yields are going higher and people are panicking just because of that. Hey, come on. Do you have better things to panic about? Economics 101, when stock price drops, bond goes up. Vice versa. Why? In theory, bonds are safer than stocks, especially treasury bonds, but they offer a lower return. As a result, when stock goes up in value, bonds go down. Stocks do well when the economy is blooming. So this time, we have both bonds and stocks dropping. So economics 101 is not relevant. So there are a few reasons why both could fall together. Number one, the loss in confidence in the financial system, just like Venezuela or Lebanon. A currency crisis, World War III, rapidly rising inflation, rapidly rising interest rates, or a huge misstep by the Fed. Today we have the fear of inflation from all that printing and rising interest rates. See that spike. In such environments, value stocks like banks perform better in high inflation periods and growth stocks perform better in low inflation. This is good. We do not want a bubble like the dot-com where everything went up. So when markets rotate to value, be careful of speculative stocks. They are going to get hit. This is one of the reasons why I sold everything except Tesla, and I made a few videos and multiple Twitter posts right after my order is filled. I believe in being transparent and doing what you say matters. We together made money with some specs. Thank you very much. Specs are like ONS. Market speculators going to hurt real bad. In the value-driven markets, telling the public you're going to make your first revenue in 2 to 3 years later, or telling public you're going to make a profit in 5 years just doesn't cut. Value-driven markets are more focused on fundamentals versus selling a dream. Though value stocks have gone up, if the overall market drops, everything is going to drop. In the stock market, there are two periods, a period of certainty and uncertainty. We just emerged from a Fed support market, which is a certainty market. Now Fed is refusing their support for the bond market, which becomes uncertain. We need this period of uncertainty to transit from a Fed-supported market to a economy-driven market. One thing I'm pretty clear, buying more during the uncertain periods is the best way to make more money. Without a doubt, the world is recovering now and it looks prime for a restart. To sum up what I just said, stocks and bonds are down at the same time because inflation, fears, and rising interest rates. Rotation to value is happening. Markets are in the uncertainty mode because markets need to move from a Fed-driven market to an economically driven market. The world is recovering, so get ready for the next boom. It's days like this that investing seems stupid. I know how you feel. Remember the feeling back in 2020 March? That's just the nature of investing. Does it sound stupid now to invest back in 2020 March? The stock market is like this when the world feels all gloomy and dead. These are the times where the rich get richer. I just transferred more money from my brokerage. It's been a long time since I've done this move. People call me crazy. I don't really care. I've been called crazy for years. Donkeys will always be donkeys. So, don't be a donkey.